Hey, good afternoon, everybody. Chris Lester here, your weekly host. I want to thank you all for taking time out of your day to come listen to us share some different topics. There's a lot of great information that as things change in our environment that we want to just touch on different topics. And one of the ones that has always come up when we sit with clients is Social Security. So without further ado, sources of income for Social Security. Well, let's look at the advantages and disadvantages of using certain sources of income during retirement. Basically, I think of this like a three-legged stool, right? So there's really only three sources of income. Would be Social Security, which is one of them. Employer-sponsored retirement plans, just things that we've squirreled away, whether they be in our 401ks, our IRAs, 403bs, TSPs, things of that nature, and personal savings. Once we decide to turn off income, that's going to be like being on unemployment for 30 years. So we have to make sure that we've amassed enough assets or structured to get maximum benefits from, all sources. So today's topic obviously is about Social Security. And due to the demographic changes in the U.S., the Social Security system could face major financial challenges during the declining fertility rates and increasing life expectancies. Today's about 12% of the total population is 65 or older, but by 2050, which is not that far off, so within 30 years, it will be about 23%. As a result, the Social Security system is expected or is experiencing a declining worker to beneficiary ratio. This presents challenges to policymakers. So think about it like this. Social Security was never designed to be a retirement plan. It was actually 1935, I think, Franklin D. Roosevelt Old Age and Social and Disability Income Plan was how it was created after the Great Depression. Back then, we had, even before 1960, back to 35 and the 40s, right, you had 5 to 6 people putting money into to pay one beneficiary. But now fast forward to 2005, and for every 3 workers that are putting money into the system to help pay for one, and it's estimated by 2040 that will be accelerated to about 2 to 1. So it's just understand that it's not sustainable. So form is forming, and what can you expect? What are the solutions? There are solutions here. We're not going to like them, but change is coming. So the first is you can raise full retirement age. FRA is a term you'll hear us use. You can increase payroll taxes. So the amount that's being withheld every week, it's a tax. We don't see it. You know that if you get a big paycheck one week, you seem to have less spendable income because more of it went towards expenses. Well, that could happen again in the future. They could raise early retirement age. So right now, like 62, they could tend to lift that. Let's make it, they're going to make you wait to 63 or 64. All those have an actuarial effect. And then they could reduce the cost of living increases. We've already seen them do that a couple of times where COLA for a couple of years were 0%. So if we're not getting pay raises along the way in retirement, then that could be problematic as inflation and things continue to cost more in the future. So how is your benefit calculated in a dual income household? If one of the folks maybe didn't work for a period of time, maybe they were raising children, then I make sure that that person is doing whatever is necessary to get their 40 quarters of work in and under their belt, because that equates to about 10 years of actual employment. So, if somebody is not put in the full 10 years, then they are ineligible for Social Security. So it's something that can be done to make sure that that criteria is met. And then once they do is after you have those 10 years, they're going to take your highest 35 years of earnings and they're going to base their payout based on that. So think about it. When we're young or when we were younger, we might have some very low, even zeros in our income earning years. But as we start to enter the workforce, we started making more money. Well, as we get closer to retirement, it would behoove you to try and eliminate some of those zeros and put in higher income earning years so that you could get more of a benefit on the Social Security. So that's how it's actually calculated. And it's a way to plan ahead if you know, hey, if you're 55 or 57 or 60 and you think, hey, I'm thinking of retiring, what can you do to help stack the odds in your favor? So Social Security key factors, you will be eligible for full Social Security at full retirement age. That's called FRA, typically between ages 65, 67. If you elect to receive your benefits early, you'll take a reduction up to as much as 30%. And if you choose to delay taking Social Security, you will earn delayed credits. And we're going to show you that here in a second. Now, I show you this because we used to get these every year. Now, depending on how old you are, the government now sends them out every 5 years. But I think once you reach 60, then it starts to come every year. But a couple things. It's a lot of numbers on this page. I'm not going to get into a whole bunch of detail. But the top line in this example is somebody's full retirement age. So it's 67. This person would be eligible for $1,619 a month. But notice that the line under that is age 70 would increase that to 2023. But then look down even one more line. And if they elect to take it early, they could actually be taking a serious haircut. I will always say Social Security election should not be made in a vacuum. You cannot listen to water cooler advice, people that think that they know what's best for you, because all of your circumstances are different. And the other thing I'm going to point out too is that paragraph that has a star next to it at the middle of the page. It says your estimated benefits are based on current law. Congress has made changes to the law in the past and can do so anytime. This is printed right on their form. The law governing benefits amounts may change because by 2033, it's not that far off, the payroll taxes collected will be enough to pay only about 77% of scheduled benefits. The government's telling us in writing they're broke. Just be careful having a plan entering into retirement, using and being cognizant of tax law and changes and income needs. I mean, there's so many moving parts here because the impact that your income will have on your taxation of Social Security can be devastating. So that's why dealing with a financial advisor that understands these rules is critically important. This chart here, the numbers in the middle just say, hey, if this is the year that you were born, off to the left, that would make you this age and the month that you would be eligible for FRA or full retirement age. The number to the right is the amount of the full benefit that you'll actually get or a reduction of if you take it early. So let's go all the way to the bottom and we'll take me. I was born in 1964. And if I elected to take it at 62, I'd be taking a 30% haircut off of my Social Security, and that could be a mistake. And again, there's a lot of factors to take into it when making this election. It shouldn't be made in a vacuum. So if in this example, somebody was age 66 at full retirement age, that's being born between 1943 and 1954, to the left of the spectrum, you'll see that there is a reduction all the way down to 25% loss. So if you were expected to get $2,000 a month at age 66, a 25% reduction means that you're only going to get $1,500 a month if you elected to take it at age 62 following water cooler advice. Now, everybody's circumstances are different. And if you need the money, fine. But if you don't, because part of what we have to understand is most of us have saved money in our IRAs, right, which have not been taxed yet. And most people end up deferring those to a point in time where now you're being forced to take RMDs. And now with the CARES Act and the Secure Act, right, maybe to age 72, now you start to take this money out of there and it's now impacting the taxation of your Social Security. Where maybe a smarter play would be, let's start to spend down that money first, because if you look at the right side of the spectrum, see that every year that you wait, you're actually getting a pay raise of 8% a year under current law. And I'm going to ask you, where can you get 8% on your money right now? This is governmental design for your benefits. So the longer we can stall and delay Social Security could end up creating a income stream that could last for a significant amount of time. So what will your spouse get? So if you look at their full retirement age, if it was 66, at age 62, instead of getting 50%, so in my example, let me put some math to it. If full retirement age, your benefit was $2,000, your spousal benefit typically is 50%. But if you elected to take it early, where they would have gotten $1,000, you took it early because you wanted to take it at age 62 because you listened to the water cooler expert. That means that your benefit now is $1,500. And then your spousal benefit would only be 35% of what they would have gotten, or they would have gotten $750 versus $1,000. So this is why, again, Social Security decisions should not be made in a vacuum. This is where everybody's circumstances should be looked at and a light shined on it so that we can understand what the actual impact is going forward. If you had the misfortune to be divorced and you have an ex-spouse, this is a little bit of levity here. Lady Nancy asked her, Winston, if you were my husband, I'd poison your tea. And Winston Churchill, if I were your husband, I'd drink it. Ex-spouse benefits, you must have been married at least 10 years, must have been divorced at least 2 years, and the claimant must be unmarried. Widowers, so if you've lost your significant other, if you remarry before you reach age 60, you cannot receive benefits as a surviving spouse while you are married. If you remarry after you reach age 60, you will continue to qualify for benefits on your deceased spouse Social Security record. However, if your current spouse is a Social Security beneficiary, you may want to apply under that spouse's benefits on his or her record. It really just depends on how much money you have, which one's going to pay the higher paycheck. So the living spouse or divorced living spouse will step into the greater of the two individual benefits. And then you can elect that as early as age 60, but follow the rules carefully. Do not overlook spousal continuation. All right, so working and collecting Social Security, if over to the left, you see age 62 until full retirement age. This is where you're going to retire. I just have helped one of my clients retire in 57. They're done, just done. Now, they're not taking Social Security right now. First of all, they can't take it until 62. But let's just say in that example, they elected to take it. Say, hey, listen, I'm going to quit my job where it was just brutal, but I'm going to go work at Home Depot or at Uber or do something to keep busy, and I'm going to earn an income. Be careful, because anything you make over $18,240 for every $1 benefit for every $2 earned above the limit. So meaning that if you earn $2, so $18,242, you would lose $1 Social Security. So you could unexpectedly go to work, make, 30 grand, and end up giving all your Social Security election back to the federal government. And then if it's a full year of retirement, basically it's for every $3 above the limit. So if you basically the same year, so that's $48,600. But after full retirement age, and this may change in the future, but right now, if you decide to work after your full retirement age, there is no limit on income right now. So taxation, this is the one where it just needs attention. We've talked about this in the past. I will talk about it again in the future. If you're pulling money out, if you're married, filing jointly, and you're pulling and earning combined collectively in your household over 44 grand, 85% of your Social Security is subject to taxation. So, that's why starting to figure out strategies, let's start to do Roth conversions. I mean, taxes have been extended till next week. July 15th is coming up. If you haven't looked at doing Roth conversions for last year, you should consider doing so. And if you want to look at it in the future, it's worth starting to add that element back into your plan to reduce the risk of taxation on your Social Security in the future. So when and how should you elect Social Security? So again, Social Security decisions should not be made in a vacuum. Things to consider. When and how you claim matters. The rules are complicated. There are many combinations and options. And that's one of the things I'm going to show you here at the end is how do we look at and how can you get your hands on an optimization strategy, all based on your primary insurance, not your PIA. Less than 22% of financial professionals understand Social Security. So if you're doing this stuff yourself, get a second opinion. I mean, you could end up making monumental mistakes long term. Social Security office and personnel cannot and does not give advice, and don't commonize retirement dates with Social Security. So that's something. Just because you retire doesn't mean you need to elect Social Security, start claiming. So you'll see these things. When to elect depends on a lot of factors. Look to this. I mean, marital status, your age, life expectancy, total assets available, your liquid assets, your need for income, your desired standard of living, planning to continue to work, survivor needs. This is why going to the person that's sitting at the water cooler telling you, hey, listen, I just took my Social Security because I want to make sure I get mine. Right? I paid into it all those years. Social Security is going to be bankrupt. You should take yours too. Listen, Social Security is not going nowhere. It's going to be there. But making sure you maximize that benefit for yourselves takes, like I said, shining a spotlight on it. So how to find the optimal claiming strategy? Analyze and utilize the rules of Social Security. This may involve combining and or postponing certain benefits, right? So just looking at the puzzle and allowing somebody to put in what-if scenarios. So this is one of our reports. Anybody on this call or the advisor that invited you to this call, at no cost to you. If you'd like a copy of your report and just see what the difference is of if you claim early versus waiting, how much of a difference could it make based on the assumptions that we put into the call? So this is absolutely, I think, just worth the time of you hopping on the call. If you'd like that, send us an email. And I want to thank everybody. This is our disclosure. This is our weekly call. I want to thank again everybody for being on the call. Hope everybody's staying safe. You guys have my number. If you need me, my email, reach out. Otherwise, I will see you guys on the call next week. Have a great day. Bye-bye.